So first things first, welcome everyone. So here we want to chat, do our fireside chat with a bunch of folks here that know their topic about philanthropic planning, specifically for small business owners or just having a big impact in your community. And so basically we've got Lois Graveline with us today, who's from Harmonia. And so she helps a lot of people with planning their philanthropy, specifically around having a big impact with the contributions that you are making. And so so she's a really great resource to have on here today. We also have Aaron and Joanne, and so both of them are at the Desjardins Financial Security Independent Network in Ottawa. And so Aaron is also president of Advocates Ottawa, and both are financial planners that basically help with philanthropic strategies, and so kind of help with a holistic approach. Full bios are listed in the signups where you had a chance to register. And so myself, I'm also here on the call, and I'm a tax accountant, so I often help with some tax planning, especially on philanthropic giving. So there are so many different tax strategies and different ways of doing your giving that can have different impacts. And so so here we're doing a fireside chat, kind of having a little conversation. And so we do invite you to send in your questions. So we do have a Q&A function on the call today, and you can also submit your questions through the comments. And so we'll try and get to them as much as we can. We do want those questions to happen throughout. We don't want you to just keep your questions for the end. The whole point is that we want it to be a conversation. So if there's something that we're saying that you feel needs to be clarified, just kind of quickly mention it, and we can kind of go in and actually discuss about it or clarify that point. So so I think those are kind of the main things. This whole thing is being recorded, so you're going to have a chance to watch it later again, because we may go into some details on certain topics. And I think that's about it. So so let's just jump right in. So maybe Lois, you can kind of help us understand kind of from the bigger topic of, what do you kind of see as like the major hurdles or problems in giving these days?
Sure. So thanks for having us here today, Eric, and happy to join all of you in this really important conversation. I think as long as I've been a fundraiser, which is now over 3 decades, one of the biggest hurdles out there in giving is in the fact that they're not being asked. So in part of the problem is, charities from the charitable perspective, they're not finding these donors and they're not asking these donors. And so there's that issue. But from the individual donor perspective, it's not always top of mind for individuals, right? So if they don't have a history, a childhood wrapped up in philanthropy where that was part of their annual giving process, if they don't have that experience, and if they haven't as an adult experienced what it's like to be a donor, it's not always top of mind. And so that's a big struggle, I think, is just making it known how important it is to the charitable sector. The sector needs help. And one of the biggest challenges that charities have is again, finding these donors. So it's really important to give, but it's not always top of mind. So there's that struggle. And then the other issue, I think, is in not knowing who to give to. And so statistically, there's 86,000, just over actually 86,000 registered charities in Canada, and then another 84,000 nonprofits. So that's upwards of 170,000 different organizations out there, all doing great work. But who do I give to? Questions like, who has the most impact? Is it a local impact? Is it national impact? How long have they been around? Who's on their board? What is their mission about? So there's lots of questions around who do I support? And sometimes that can be a barrier as well. If they're not certain about who to support, then maybe they just don't support at all. Mm-hmm. So those are kind of the 2 biggest ones that I see most often.
Yeah. No, that makes a lot of sense. And I don't know if Aaron, Joanne, if you have any comments on the biggest hurdles or the biggest kind of problems in the sector right now.
Absolutely. I mean, I'm just going to add quickly to what Lois is saying. I think with a lot of our clients, one of the biggest hurdles is they don't know how to give, right? Mm-hmm. So we talked about who to give, and but they just, it might be on their list of things to do, but it might be the 10th on the list. And if they don't know how they can give, and we'll share some really great examples of uncovering that opportunity, but it's a struggle for them, right? Because they have everything else that they need to focus on. And so I think for us, it's important to show people that it is, it's doable. Here's the impact that you have, and here's how the charities benefit, right? How you can make an impact in the local community, but also how you benefit as well. And I know a lot of people give not because they just want to benefit on the taxes, but I think when we talk about strategic philanthropy, it's this idea that you can be strategic and you can do a lot of really good things in your local community.
Right.
So I know we'll get into that a little bit more.
I know that Lois said something that immediately something in my head went off, where I said it's about planting seeds, right? So studies have actually shown that Canadians want their financial planners to be engaged in this process with them, to uncover charitable giving and what works for them. The challenge can become, and people think, well, I have to be an expert. Now, the beautiful thing about our community as advisors is there's a lot of people that specialize in a lot of different spaces. And as professionals, just like in your professions, people are often very willing to collaborate and share information. But there's also lots of great organizations like the Canadian Association for Give Planners, where people can go and get information and use the resources. So I really encourage the public to plant the seeds. Ideally, an advisor plants the seeds to get the conversation going, but I'm not going to say that's always going to happen. And that's not any person's fault. There's always a lot of things to talk about with clients in a financial planning setting. But when we can be part of that conversation and not only be more strategic on the tax side, but put meaning to the money, it is a better donor experience as well for the client. So the conversation is much more than just, tax is obviously a very big part when you get more to the back end, but opening the conversation and identifying a good fit value-wise. So when they are giving, whether it be sporadically or throughout the year, they're planning around, well, what's the budget? What should I be spending? And then how is it having impact? And that's what, is amazing about what Lois is doing out there, is because some people have never had that experience. And so she can really connect those dots for people. And that's just a better giving experience, which also makes it more successful for the charities when people feel they've had a more impactful, engaged experience.
I couldn't agree more with you, Erin and Joanne, and I've seen it time and time again. I mean, I think in my experience, there's transactional relationships that donors have with organizations. Eric, Joanne, or Erin suggested that I make a charitable gift because of these tax benefits. And it's just kind of a blind shot. I'm going to pick this charity. And that's the extent of their relationship with the charity. Now, great on one hand that they're making the donation. But I think the three of us here presenting today on this really important topic, we all align in the ultimate goal is to make it meaningful, right? We want to make sure that in the course of the work that we're all doing for our clients, that we make it meaningful and enhance it as much as possible. And so that requires a little bit more work and fun work, right? In identifying just what you just said, Erin, in identifying and aligning individuals with the charities that resonates with them and matches their philanthropic goals.
And I think that, so one of the studies that the CAGP actually did showed that only 21% of donors actually do it specifically for the tax relief, right? People are looking for having an impact, being part of a community, seeing a difference being made. So it's really important that that is the conversation up front. And then to me, the tax benefits are a bonus that come along with doing good, right?
Yeah, and there are also studies out there that I did quite a bit of research on this, but there are studies out there that point to the indisputable facts that people who give of their time, their talents, their expertise, their wealth are happier people, generally speaking, right? And they have a lot less incidences of depression and stress, and they tend to live longer. So, all those wonderful endorphins are released because they know and they see firsthand that they're doing wonderful work. And Eric and I have crossed paths with cystic fibrosis, Eric, our experience with that, and, just our own volunteering and our own level of support to the organization, we saw amazing things happen over the course of 20 years, where the median age of survival when I first worked for cystic fibrosis was early 20s. And by the time I left the organization, it was early 50s. And, and that made us all feel really good. You experience that, what they call the donor high, right? And we want to do more. And it's almost like drinking the Kool-Aid, right? Once you do it, you want more.
Yeah. And it's one of those things where, like, ooh, in that case, like, you feel the impact, right? Like, you're like,
absolutely.
I'm thankful I gave.
Yeah.
And we should continue to do this because it had such a big impact, right? And so
Right.
I know oftentimes, Lois, you're the one helping out people figuring out how to have the most impact, or who you should have an impact on, right? Like which, let's say, cancer society you should give to, or so maybe kind of walk us through, maybe not like the full plan here, but like a high level of how do you figure that out for people?
Yeah.
Like where does it start? What's kind of the next steps?
I think it starts with good folks like you guys, right? To me, you're the gatekeeper of individual donors who have not yet self-identified to the sector, right? So again, if you understand that the problem that a lot of charities face, one of the most critical ones, is not finding new donors, I feel like you guys have the access to those new donors, right? You, again, in the course of your work, you're advising these folks, and maybe for one reason or another, they just haven't given. And so to me, there's a glaring problem that we can collaborate on and work together. And so it would be a matter of you introducing me to your clients who you think need the help. And then I have a personalized approach that I apply, where I basically do an intake with them and an interview as such, where I sit down with them and just really get to the heart of what means something to them. Again, going back to, do you have experience as a donor? Does your family, was that part of your childhood? Where are you now in life? And, just prodding and poking to get those answers, so that I'm not only tapping into their intellectual selves and what they're trying to accomplish with their gift, but also emotionally, what is going to resonate with you and your family, and maybe something you can pass on to your kids. And then I go do the research, I present a few profiles to them, and I can do that pretty quickly because I know those most salient questions that donors are going to have about a charity, and I know how to find out the information. And so I'm able to present a few options to them. They make the choice. And then the final piece, which I feel is really important, is actually connecting them to the charitable organization they choose. So Joanne just mentioned something earlier, but in terms of people getting busy with their lives, and it's 10th on their list of things to do. But I feel like that last hand-holding step, where I actually connect them to the charity, set up a video introduction, and say, off you go. And, and may the force be with you. And hopefully they have a long, really rewarding relationship with the charity. And so that's kind of the program in a nutshell. And I have dubbed it as PhilX.
Yeah.
Which is short for a philanthropic experience that's tailored just for the donor.
Wow.
Yeah.
Yeah, for sure. Yeah. And one of the things I've noticed with many of our clients, like, is that, because like we're going to see their donations at the end of the year sometimes, and sometimes they don't approach us about the planning aspect, right? So we may see that there's like 50 or 100 donation receipts, but there was no coordinated effort for this. Like, it was like whoever sent the mail, they responded with a donation, right? And so oftentimes there's an opportunity there to say, look, you're giving a total of X amount per year typically. Now, are these the charities you actually want to give to, or do you want to give it all to one charity next year? Or do you want, it doesn't cost you more. It's just, just you can have a bigger impact. You can go and like do a tour of one of the facilities, and you can donate in a certain way that you can actually donate more. Like, if you can save on taxes when you do a certain transaction of donation, you can donate even more, right? So so just planning it out can have a huge impact, even if it doesn't cost you any more, right? And so maybe Aaron, Joanne, you can kind of maybe give us some examples on some situations and ways to give that are not just cash, right? Because I know there's so many other ways to donate, and you guys have been very creative in your planning.
Yeah, I'll let Joanne connect to a really good scenario that she has that we've presented in the past, but it's just a really good example of how being strategic and having some planning around those donations, because we know, and one thing again that Phil said that it pops in my mind, that we talk about having a philanthropic mindset and having a strategy where you see about I'm making change and making impact is much more meaningful and satisfactory to the client than just making these random donations. So that's where pulling everything in and taking a step back to have a strategy, and it might be a lifelong strategy. Of course, it depends when we talk about the high net worth clientele, and then that's not everybody, right? So that's not to say that the average Canadian family can't give. It's just, where are we giving and what impact are we having and why is that meaningful for us? And then the other thing it allows us to do is, we can respectfully decline other donations because we have a plan. And that's not to say we can't pivot in the future and move that strategy, but it allows us to kind of know where we're headed with this and why we're doing it. And you can kind of stand your ground to say, no, right now I'm committed to this, but in the future, I'm happy to hear about that. So Joanne has a really good, we call it a case study, but it's a real client that she was able by using strategic philanthropy to uncover that they could actually give more than they thought they could.
So we use this word, we've kind of coined it, I don't know, heard it somewhere, strategic philanthropy. And it really is this idea that it's philanthropy, but with planning. And the planning means that we're channeling more money that would have otherwise gone to taxes, go to somebody's favorite cause instead. So it's this idea that we were just going to do a little bit of planning to make sure that that impact is bigger, right? If it can be. And so, this is a great example. I had years ago, a couple, they were recently retired in their 65, 67, if I remember correctly. And they were very philanthropic. They wanted to be involved in the community, and they had a local hospital that they wanted to donate to, but being on a fixed retirement income, they thought they only had $1,000 or $2,000 that they could give. And so with planning, I looked at their overall financial situation, and they had about $500,000 sitting in GICs. Now, this money was allocated to their kids and grandkids. So for them, the biggest goal for the next generation was that they pass down, this investment to their kids and grandkids. And so when I started doing the planning, I knew whatever we did, we had to make sure that we get that number one goal, right? That they are able to do that. And so when we were doing the planning, we saw that probably at life expectancy, the GICs would grow to about 800,000. So we took the GICs and using 355,000 purchased an annuity, and using the income from that annuity, we purchased a life insurance policy for 800,000 with their kids and grandkids as the beneficiaries. So regardless of how long this couple lived, they were able to satisfy that first and most important gift. Their kids, their grandkids are going to get this, this money, this inheritance. But what that did was that freed up 145,000. And they were able to make a significant donation immediately. So, going from a few thousand to 145,000, well, now they have a plaque, and there's so much more involved, and just the pride, right? They have a legacy that they're leaving for their kids, for themselves. They have the tax benefits, so they were able to get tax benefits for the next 5 years. But I think it's a beautiful example of you can have an even greater impact when we can plan. Working with somebody, any financial advisor or most financial advisors, hopefully when philanthropy is at the forefront of the conversation, we can plan and make sure that it's done in the most efficient way so that it can have a bigger impact.
Yeah.
And one thing about that story that's really important to touch on is that the importance of talking to family members, right? So when mom and dad have a pot of money and they know their intentions, has that been communicated to loved ones? Because all in the nature of, we're talking about giving back and making an impact on charities. We also want to be conscientious of the things that can go sideways, which are families saying, why are you putting this X amount of money to this charity? Or why have you taken our inheritance and done this? So it's really important in the planning process that families are engaged so that everybody is in agreement that this is a good strategy and not, it's not of ill intent, because, communication is important.
Yeah, and I think it also motivates, I'm thinking of generational giving, right? People learn and are inspired by others, right? And so in a scenario like that, I think those children growing up with seeing that bearing witness to that every day, that it's important to give back to community, that then is instilled in them. And so maybe as adults, they continue that trend, right? So I think that's important too. And that's an absolute thing. I mean, I remember doing that with my own kids, right? From the time they were bigger than knee high to a grasshopper, as my mother would say, that was instilled in them how important it is to give back. And so I think that works too.
Yeah.
Well, and the reality too, Lois, on that note, is that the charitable giving has been decreasing, right? Over the last 30 years, there's been a substantial decrease in the amount of money that people give. Partly probably because of immediate gratification being a real thing that we deal with in today's world. But so it's even more important that, especially at the advisor level, because we are seeing the biggest intergenerational transfer of wealth ever in history. And so what a great time to try to reverse those trends and have people be aware of this is really important to my parents. And again, it's a little bit of everybody's busy. So stop, breathe, think, and what are the values behind this? And has this been passed down? I know certainly in my family, they're very charitable. My parents always have been, both with time, right? There's the volunteer aspect of what charities need, also very important. But it's really important that we start to transfer this thought process, because we know we have these two issues, really: the decline in the amount of giving over the last 30 years and this massive amount of money that's about to change hands over, well, it's already starting, right? So.
Yeah, and I like what you mentioned, both Lois, Aaron, Joanne, about getting the kids involved, because what you were saying earlier, Lois, is that you kind of have main families that do have philanthropic planning just as part of their core, and that you learned it from your parents, and you keep doing that. You also have the families that kind of sporadically give, and there's not much strategy, and then you have like some others that just don't give, right? And so I think, just instilling that into your children is like generational giving, like you mentioned, right? Like if it's one thing for you to be generous or to have a philanthropic strategy, but to be able to carry that mentality to the next generation and to the generation after that, that's a real kind of legacy gift that you're giving to them by getting them involved in the planning. Yeah.
And I think it's important too. I have observed over the years that not everyone understands what the sector is about and how critical it is to Canada's fabric, right? When you think, when I quote the statistic, people always are surprised by it, but the sector contributes 8.3% of Canada's GDP. That is huge. And not everyone knows that. That's bigger than the agriculture and transportation sectors. It generates about $192 billion in economic activity, this sector. It employs 2.4 million people. And it relies heavily, of course, on volunteers. There's about 13 million volunteers that are utilized throughout the year, any given time. Wow. So it is a pretty significant economic driver. And, more fundamentally than that, I think about what Canada looks like without these organizations around, because you can't swing a bat without hitting a charity of some sort, a nonprofit in your community, right? You think of the shelters, pet shelters, domestic violence shelters. You think about the hospitals, all the foundations, and not everyone knows that equipment within the hospitals is funded by community, not government, right? You think about all the different health charities and the research that's going on, the environmental organizations. I can't imagine our country continuing on without this level of support around us. And sometimes maybe we take it for granted, right? The soup kitchens, the missions, and so on. Sometimes we take it for granted, and it's, again, not always in your mind, right? So I think it's important. There's a lot of education to be done about why this is so important. And I am so convinced that once people make the move to become an impact donor, that'll be it for them, right? They'll want to return next year to either giving to that same organization or another one, but they will be convinced. And not only that, they'll start talking about it, right? What a fantastic experience this was for me. What a rewarding experience. I want to do it again. And, tells the neighbor next door and talks to other family members about how wonderful this was. So I can't see there being any downside to this, right? And I really love the fact that there's this amazing synergy between each of us right now on this webinar, right? In what we're all trying to do. It's pretty cool.
No, it's cool.
I always go back, Lois, and I may have shared this story with you because, as you know, we can get a little passionate from time to time. It's about that experience, right? And so I've been in this industry for 14 years. I spent my first 10 years working at a hospital. And I'll never forget that I was young, just out of university, and people often say, oh, donate, we're raising money. And people you're like, what is that? Why would we need that? So as it relates to hospitals in particular, we go, oh, well, it's healthcare, it's paid for, right? Because we're in Canada. But as you mentioned, so many of what I call the TLC, the personal touches of an experience in a hospital, are fundraise money. And of course, that was a big part of my job when I was there. And I remember just being young, and we raised this money, and we're like, we're going to buy a blanket warmer. And I was like, what? And then to imagine it's winter in Canada and you get into a really bad car accident and it's cold and you get brought into the emerge and this is your experience, and a volunteer comes up and lays a warm blanket over you. And all of a sudden you have this level of comfort that you just didn't have, right? Or you have a loved one that's sick and you're staying over and your family's staying in the ICU unit for families, and someone passes over a package full of toothpaste and a toothbrush and sundries that now can enhance the experience and the comfort level, because you don't have comfort in these situations. So to me, it's like when you can understand things and that goes for all charities, right? Like the Snowsuit Fund, Lois helped our professional organization at the beginning of January. We did a presentation where she investigated and walked us through a variety of charities, and we had our members vote, where is our charitable monies going to go to this year? So we wanted it to come from the members because they're the ones who come to the fundraising events. And one of those ended up being the Snowsuit Fund. And we just take it for granted, right? It's cold in winter, so we buy a snowsuit, but not everybody can buy a snowsuit. The other organization was the Canadian Centre for Sport and Mental Health. People go, well, what is that? Well, let's talk about that, right? So it's all these people out there. There's so many charities. And if you can break it down on imagine this is you experience, and then this is what we're giving, and this is why, you go, oh,
yeah.
Okay, so much more impactful, right?
Well, Lois, I'm going to jump in. So I remember when we first met and you told me the story about how you helped, I think it was a group of women buy a mammogram machine.
Yes.
And I will never forget that. And I talk about this story too, because that is impact, right? How many women are affected by breast cancer?
Yes.
Right. So then you have these group of women that can see their money being put to something that's going to save so many lives. Like that is what we talk about when we say impact.
Yeah. And you would think when I told you that story, I mean, again, being in this business for a while, it doesn't get old, and you would think it might, but it doesn't. Oh, I remember it when we finally installed the mammography machine and just getting everyone on board. I mean, it's like goosebumps time, right? And people tear up because of that, like what you said, and you don't take it for granted. There something like 7,500 people are scanned using this machine a year and more, right? How many lives is that? What does that translate to, right? So yeah, it doesn't get old. I can sing about this till my take my last breath.
And I really liked what you said earlier. I think it was Joanne about being able to respectfully decline a donation, right? And I think that by having the right planning in place, because a lot of the people we're talking to today are business owners or work in a professional setting of sorts, and so we all know the benefits of a good process, right? And so to have a good framework and a good, steps to follow in order to help your decision making, right? So if you say in 2023, I'm giving to mental health charities. Well, when the donation comes in, you can respectfully decline, saying that, they could potentially get a donation in 2024, but that for the current year, you're focusing your efforts towards mental health. It's like you've got a good decision. You don't have to consider, well, should I give $200 over here? Should I not? Like, how do I tell them that I can't? Like, so I like that idea of like having a whole process that gives you a framework as to, you know, kind of the decision tree of like, does it make sense? Is it within budget? Does it have the impact I want? You know, is it the right charity? You know, yes, good, do it. If not, next year maybe, you know. And so I like that kind of idea, and I think that would resonate with a lot of business owners who follow a lot of processes. The other thing that that you said that resonated with me as well is, you know, the structure that you did with this family about you know, the annuity and the life insurance policy. Basically, they get to give their gift while they're alive, right? And so for a lot of people, they plan on giving in their estate or in their will, you know, and so. But it's another thing to be able to give it while you're alive, while you can see the impact and you can actually appreciate it and get to see what actual difference it makes, instead of waiting until you pass away and then your children now have the burden of figuring out, wait, what was the charity? Oh no, they misspelled the charity name. Which charity was that? I don't even know. Like, you know, it just said Cancer Society. I don't know which one. Like, was it provincial, federal? Like, you know, and so you can avoid that confusion by doing it early, and you can actually enjoy the giving, right? I thought that was really cool.
You can enjoy the giving and you can benefit from it. Like, again, I know people don't do it because they benefit, but why? There's nothing wrong in benefiting when it's done the right way. And there are so many different ways to give, and it's okay to be strategic. And this is what I say, like, regardless of the type of giver you are, because you just want to do good, because you want to make an impact, or because it's good for your business, right? It's good to show that you're philanthropic. That's all okay. To be strategic really just means that you can make, at the end of the day, you make a bigger impact, right? So whether it's donating with life insurance, whether it's flow through shares, like there are so many different ways that we can accomplish the gift. It doesn't matter. It doesn't matter, you know, what avenue it's doing it. I think it's taking the action, it's connecting with a charity. You know, I don't know if I'm jumping ahead a little bit, but I hear all too often, you know, we're in a world where a lot of business individuals have grown their registered investments.
Yeah, for sure.
And they're at the point where that registered investment, say they're in their 70s, and now they have to take out these RIF payments that they are forced to take out. And so it becomes a burden, right? They're annoyed that they have to take this money out. They're being taxed on it. Then they reinvest it. They're taxed on it again. And so one of the strategies that we sometimes talk to people is, why not donate that RIF payment, right? You're not getting taxed on it, but then you get the benefit as well, right? It's things like this that your burdens, these tax burdens or these annoyances, can actually turn into something spectacular.
Yeah, and what's great with those registered accounts too is that they're creditor protected, right? So like even another example might be that if you do have a bunch of RIF or RSP and you pass away, that RSP or RIF can be donated and you're creditor protected. So even if you do have not say a bankrupt estate, but a very, you know, illiquid estate that would be difficult, that money still gets donated to the charity. You know, it's not going to be the net of whatever's left. So there's some big advantages there too, right? So yeah, no, I think what you're saying makes a lot of sense. Yeah, and so yeah, some people choose to give through registered investments. There's so many different types, right? Like we've talked about this before. From a high level, there's, you know, private foundations that can be set up. There's donor advised funds, and we've talked about gifting publicly traded shares as well. And so oftentimes you want to align your giving with that you're gonna probably do anyway, but just in the right format that will align with your own personal circumstances, right? So in some cases, you might be selling a building in 2023 and you wanted to make a donation in the year or in the following year or whatever, but you just do it in the same year so that you're offsetting any capital gains, right? You think about those kind of things, right? So some people like to choose a life insurance policy where, you know, you can kind of just set up the policy and then you donate the policy itself, or you can donate the premiums so that they can pay for the life insurance policy. There's a few different strategies there. Even a lot of small business owners, you can even do an estate freeze. So you may have already done an estate freeze on your common shares for your corporation, but you can convert your common shares to preferred shares and then donate the preferred shares and you're essentially converting dividend income into capital gains, which is a much more preferred way of taxation. So there's really good ways of doing that, and you're donating like non-voting shares as well, because maybe you don't want the charity to control your private business, but they can still benefit from it, right? There's also those flow-through shares, which are very tax advantageous, but there's obviously some limitations to it, which we can get into at some point. So yeah, there's all kinds of different ways to give. Maybe do you have any other examples, Erin or Joanne, on any kind of like situations or things that
we see a lot of people, like you brought up something there that's pretty relevant, and it sort of applies to the place we're at with this intergenerational transfer of wealth and assets. So a little bit of it comes down to, like, first of all, I want to acknowledge that it's really important that when you're doing the planning, that you're collaborating with a Zenbooks, Eric, with someone like you, that you can say, okay, Eric, I've got this client, here's the situation, here's what we're thinking from the tax perspective, poke holes in it, right? Because you want someone to be looking at the strategy and poke holes, and it's really important because it can get very complex, especially when there's property and assets and multiple children, multiple generations. So it's important that you understand that we talk about, if they're talking about giving at death, it's about, okay, is there a cottage involved in the family? What does the capital gain look like? You talked about an estate freeze. Do we deal with it now? Do we deal with it later? Because all of those decisions can circle back around to how you give and how you can be strategic with the giving to address the different things that are going to happen along the way as we get older. And it begs conversations about, if there's multiple children, do the children want the cottage? Can they upkeep the cottage? Is there going to be a fund for the cottage? Do we need to be offsetting a capital gain with a charitable life insurance policy? So there's lots of considerations. We find in the end, when you start to really dig in and understand the whole situation, people can often like to land somewhere where they're doing something today on an annual basis because they want to be involved in that impact. But then they want a legacy. So from a legacy standpoint, now we're talking about, the deferred gift of life insurance versus, like you said, like you could do a present gift of life insurance where I'm assigning the hospital today as the owner, and I'm going to be the payer and they're the beneficiary, and I'm going to see that immediate tax relief. So is that valuable to me today? And because then I'm taking advantage of it today, but I know I'm leaving a legacy in the future. But then is there something else I want to do today around just pure giving, which of course still the most common way of giving is cash, right? So people donating money. And of course, if you ask a lot of charities, they would probably say, cash is king in terms of meeting their short-term goals.
Yeah.
But when it's part of the overall strategy over a long period of time, I think when the right planning is done, you can have it both ways.
You can do both.
Yeah.
So the RRSP example that I used was a case that an individual had 700,000 of registered investments that they didn't need for their retirement. And so what we did was we took 3,000, donated half of it directly to charity on a monthly. So this was 3,000 a month on a monthly basis. They made a donation and took the other half, so another 1,500 a month, and had a life insurance policy with the charity as the beneficiary. Wow. And so what we saw, when we look at that 700,000, if you think about more than half of that being eaten up by taxes, they ended up having, the projections, they would have during their lifetime a donation of 450,000. Wow. That life insurance was for $1 million. So at the end of the day, their legacy is 1,450,000 approximately. Unreal. Which is incredible, right? And this was money that was just sitting there that was going to, again, they were forced to take, because they're forced to take it, their other investments are then taxed at a higher tax bracket, all of these things, but yet, this is something that they can do to really, that's a transformational gift.
Yeah. And I think most people don't realize that they can have that level of gifting when they just have a couple like $100,000 in their RRSP. They don't think like that can translate to a large legacy gift somehow. Yeah.
And I think that's what's standing out for me in this as a takeaway. Just listening to you professionals speak so passionately about what you're doing. But I think for anybody listening in on this webinar, it might be a bit overwhelming. Like, I don't really understand what Eric just said, or Joanne.
We tend to get very excited about some of these strategies.
And, and where do I go to find the charity that means something to me, that aligns with my values? All of this can seem very overwhelming, but I think people should take comfort in the fact that you guys, we have their backs, right? We can make that not such a daunting experience and more of a meaningful one. We've got you, we know how to do this, and you're covered. And it isn't as complicated as maybe it sounds.
Yeah, and
it's also one thing we haven't mentioned, and it's kind of a simple one, but it sometimes get overlooked, is just gifts in kind. So yes. You've got mutual funds, real estate, shares, those can all go, and also personal use property. Mm-hmm. So maybe you have a valuable art collection, and I know, God love you, Mom, I do not want your royal indulgence, please. I have nowhere to put them. But things that we have that there is value to them, but could there be more meaning with a donation of personal use property that your children do not want? Mm-hmm. Me included. So there's lots of ways and that's where the communication, the understanding, having those meaningful discussions, it not only helps you build a relationship with a client, but it really digs down into, what will happen to that. And, of course, in our financial planning world, we're going to say the basis to every strong financial plan is, do you have a will and power of attorney? Because we can talk all day long about where your money's going, what's going on. But if you do not have a proper will and power of attorney, it's all for naught, because we can't guarantee your wishes will be carried out, right? So that just circles back around to, working with professionals in their space. And trust, right? Because, you can be told a lot of things. You've got to trust the recommendations, and you got to see, okay, does this person work with tax professionals? Are they engaging the people at the table that, are asking questions, are poking holes? I'm big on, questioning, right? Mm-hmm.
Yeah, and just one thing I was going to also add, I've seen before as well, someone donating land, right? And so if you have excess land around your farm or your property or whatnot, I've seen it where they donate the land, they can get the donation credit, and they still remain they still retain the right to access the land. So you may have given the land, but you're still allowed to go on it, right? And so you can benefit during your lifetime, and then even though you don't own the land anymore, right? So you can do that gift. We also did get a question coming in that we should probably address here. So the question came in saying, from your experience, what kind of donation seems to have the most positive impact to the wider community in general? So is that cash versus in kind? So I don't know if Lois, you want to take this one first, maybe?
I think from a charity perspective, the cash, the mission is driven based on programs and services that the organization is committed to doing. And so having that flexibility and being able to direct it efficiently with the most impact is always best for the charity, for sure. Mm-hmm. And I mean, not to say that we won't accept designated gifts or gifts that are more restricted, but it certainly makes life a lot easier when they have the ability to bob and weave as the priorities are there or surface. Yeah.
Yeah, and I think one topic that I don't think we touched on too much, but I've seen it as an issue, is that not every charity will accept a life insurance policy as a gift, or accept flow through shares, or publicly traded shares. There's such a thing as the theory of planning your philanthropic needs, but then there's also the practicalities that if it's a small charity that has 50 grand a year in operating income or revenues, they're not going to be having the capacity to do some of the transactions that might in theory work out, right? So the cash is king there as well. That's
a good point. And again, most people don't realize that the vast majority of those 86,000 registered charities in Canada and the nonprofits, the 84,000, they're small in nature, right? About 80% of those raise less than $500,000 a year. About 90% of them have fewer than 10 full-time employees. They're small shops. They're not the big guys, right? And so you're right, the capacity is limited. But I'm convinced, having worked in those smaller shops, it doesn't take much effort to get going at the process of accepting gifts like this, right? Reaching out to critical people like yourselves to say, okay, help me through this, because I do want this to be a method of giving for our organization. And so what does that look like? Very simplistically, how can I get it up and running? And so I have activated that a few times with different organizations I've worked with, right? You're right, the capacity wasn't there initially, but I could quickly turn that around, reaching out to the right people.
And that's why I really like the combination of, various ways to give. Then we say cash. I mean, certainly RIF payments are cash. One of our colleagues in Toronto, I'll give a shout out to Mark Halpern, who's actually trademarked the term CPP philanthropy, right? So seniors in retirement receiving CPP and donating that CPP. Like it's important that, you said about the impact. Well, I want to know that if cash is what's really going to make a difference, well, to me, that's much more impactful today. But rewind 100 years and fast forward 100 years, like when we're no longer here, if I leave $1 million life insurance policy to a charity, imagine $1 million then is not $1 million today, but just, if you can rewind the clock and say, wow, if all these people had done that 80, 85 years ago, imagine, what that would look like today for a hospital, for a small charity. So that, it is a long-term play, but I think I like a staggered approach to a little bit today and a little bit when I'm gone, and that becomes part of your legacy of who you are. And it could be part of a family trust legacy. Like it can go much, and you see that, right? You see in big institutions, the wing donated by this family, and that's something that they probably have done through their will and at time of death. And that still has a huge impact. So I think we can't lose sight of the today, but we also can, look 100 years from now, and I mean, we won't be here, but what kind of impact could we have? Because it's never going to go away, right?
Right. Exactly.
There's always going to be needs.
And I know from experience working for these organizations that it didn't matter which organization I was working for. We all tended to have the same major gift donors that we were reaching out to, right? Well, that pool of major gift donors that are constantly being called upon to step up, there needs to be an influx of newcomers to that. Otherwise, the fatigue is going to be there. There's natural attrition. They're going to come and go. We need to start building out that pool of people who can make transformational gifts, like Joanne was saying.
I work with several on being part of the board of directors with a local hospital and the Cancer Foundation. And I think that's something that a lot of charities and foundations are looking at, that, yes, today there's so much need that we have today. So that immediate money is always going to be so important, but having those plans, those, payments that come from life insurance. And to everybody on this call, if I can say one thing, is if you are planning on giving via life insurance, let the charity know. There are so many charities that are receiving these significant donations and they don't know the donors. They have no knowledge of them. They don't have a relationship with them. I think, again, when we talk about that impact, that is an impact that you're having for your children. So as part of planning, let the charity, if you are planning on doing this, let them know that you are doing this. Yes. It really can have an even bigger impact that way.
Oh, it's a good
point.
Don't
discount too if in your family, like you might have a 90-year-old parent or grandparent right now that has life insurance, and maybe the estate is such today that they don't need it. You can donate. It doesn't have to be a new insurance policy, but you can donate an existing life insurance policy. But again, just being aware of, there's a process to go through there, because there needs to be an evaluation by an actuary to determine value. So you don't have to discount that. Oh, well, it's too late for me because, or if you have a family member, that is also a way to give. That is actually in reality, well, we don't, their life is not going to be that long, so that will come to fruition a lot sooner for that charity, right, with an existing life insurance policy.
Right. And just from what I've seen as well, like out of business owners, 3 out of 10 current business owners intend to sell their business typically in the next 5 years, and about 68% of them plan to donate a portion of the funds to charity in conjunction with that transaction. So that's like, if a business sells for $1 million and that's the year that they want to give, like that's how major donations can occur, right? And so businesses have so many additional tools and levers that they can pull, and you can also plan that out, right? You can let the charity know, like you said, of you know, we're thinking of giving you a gift of, you know, X to X dollar amount. We're not sure yet, but at least they can plan for it, right? Like, because oftentimes, like you were saying, Lois, there's, you know, equipment being purchased for the hospital. And so, you know, you got to put in a requisition to purchase that equipment. You got to get some quotes. You got to, you know, they have to plan their way to actually spend the money. Otherwise, it'll be so much longer, right? So it's better to let them know that there's money on the way. We're thinking it's 2023, and then they can start the process of what they're going to do with that money. Otherwise, they feel like they need to spend it, even though like they don't know what to do with it, right? So,
and that's where, you know, you brought up a good point with small businesses and knowing that there's going to be a buyout or some succession happening. Like, that planning really needs to start taking place a couple of years in advance to determine what strategies could be put in place from a charitable aspect that could really make that sale more advantageous, you know, so it becomes a real win-win, because there's things that can be done that alleviate some of the taxation that could take place, but it's going to probably take a while to put that together in a meaningful way for clients. So
we always say to our business owner clients, money in motion, right? When there is a sale of a business, is one of the best opportunities to have an impact locally. That really is. It's that idea of planning and having that impact for you as an individual on the tax savings, but also the impact locally within your community.
Yeah. Yes. And I can also see an opportunity even in the negotiations, right? Like when you're negotiating on selling your business, you may say like, okay, well, how about it's 1.1 million and we're going to make a public donation from the company of 100,000, you know? So like, so you're paying an extra 100 grand, but we're also going to be making a press release and we're going to be announcing the donation, and, you know, like, so it's good PR, it's good for the local charity, it's good for the new buyer, it's good for the seller, it's good just overall for everybody, right? So as part of the negotiations, plan out the philanthropy because it benefits everyone.
That's the creativity, right?
Yeah.
I'm conscious of the time, and I just want to put this plug in, just because the audience today is probably primarily small businesses and entrepreneurs. So I want to encourage you all to Google Good Spark Grant. So we are part of the Desjardins independent network. So we're a brokerage affiliated with Desjardins, but Desjardins corporately is running right now the Good Spark Grant, which will give $20,000 to 150 businesses across Canada. They've been doing, I don't say they do it every year, but they did it last year. They're doing it this year. It's pretty much an annual thing. Deadline is November the 6th. So I would encourage you as small business owners to look that up and see if it fits into your business model.
Awesome. Yeah. And I also want to invite people that are listening in to reach out to us after the call. We're going to be sending out kind of a takeaway sheet so that you have our contact information and all of that. And so I would encourage you to reach out to either Lois, Aaron, Joanne, or myself, depending on what stage of giving you're in, or reach out to all of us if you feel like it. But we can help with that overall plan, right? And so if you do have questions, feel free to reach out then. Feel free to send us a question right now before the end of our call. We only have a few more minutes here. So yeah, so I think these are all very good points. I appreciate Joanne and Aaron for you to have your insight on seeing the money flowing. You said like money in motion, right? Like that's what you help with, right? Like you're kind of helping make sure that the motion goes in the right direction. And so we can, you know, from our side, from the Zenbooks side, we kind of help make sure that the tax impact is minimized. And if anything, there's some sort of advantage to help give even more, right? And so Lois, you know, your help figuring out how to have the biggest impact, which charity to give to, hugely beneficial. And so any kind of final thoughts before we end things over here? I don't know if there's any final closing things.
I was just going to say that, I mean, any one of us, I often compare what I'm offering as a service to that of a real estate agent. I could sell my house if I wanted to put in that effort, if I wanted to do the work, the marketing and all of that. Or I can ask for someone in the business to help me through that process. It's the same thing as what I'm trying to offer. Anyone can find a charity they want to support. but maybe they need help finding out the charity they want to support that they know it can be assured of is going to have the biggest impact and align with their philanthropic goals. That process is a little bit more detailed, and that's where I can draw on my experience and help them through that. So either way, my goal in all of this, that in my work that I do every day, is just to get more donors to charities, because they need the help. They really do. And COVID years has crushed a lot of them. And so if you're thinking about it, now would be a really good time to do it.
Awesome. Good. Any final thoughts, Erin, Joanne?
Yeah, I mean, just we're part of, I mean, we continue to focus our efforts in this area. I mean, if we could just work on these cases all day long, you know, because it's a very good good space to be, because of course we want to be always making an impact. And we are part of the Canadian Association for Gift Planners and part of the Willpower campaign. So that was a campaign they've launched that was originally launched overseas, and they saw a really big uptake in more people donating, because whether you donate through a will or life insurance, there's just the idea of the conversation in itself will start to increase people's appetite to give when they understand the importance. And then again, like we said, the tax benefits are definitely a bonus, and for a lot of people, a bigger bonus than others. But I would just encourage people to think about it and start to have the conversations.
And it's okay to plan. I think that's the biggest thing. It's okay to plan. It's okay to be strategic. It really just means that you're going to be able to have a bigger impact.
Yeah, and I like the idea that, you know, basically we're not tied to any specific charities, right? Like, it's like, if you approach the Heart and Stroke Foundation, they'll tell you that they're the best charity. If you go to like another charity, they're going to say they're the most in need charity, right? Like, and so we're not affiliated or tied to specific charities, so you get kind of that unbiased opinion as to, you know, where do you actually would have the biggest impact, right? And so sometimes people really appreciate that in the sector. Yeah.
Oh yeah, I'm learning about new organizations all the time. And again, I've been doing this for a few decades, and you know, that happens to me on almost on a weekly basis, where like I had no idea this good work was being done. So yeah, so reach out, and I'm glad that we had this conversation. It's really important, part of that educational process.
Okay, well, thanks everyone for being part of the Fireside Chat, and we'll see you at the next one. Okay.
So
Thank you for inviting us,
thank you,
Eric.
everyone.
Yeah,
Thanks, Eric.
Bye.
Take care.